So today we're going to talk about Chapter 2, and the first thing that we need to talk about Chapter 2 is the differences between recognition and realization. So recognition means that you formally report an accounting event into the horizontal statement. So record So recognition doesn't necessarily have to have a real cash exchange goes on. It's more just recording the event into the horizontal statement. So for example, if you provided service to customers on account, that would be recognition, because you have not formally received cash yet, but you're recognizing the revenue that you're going to receive. And so for the horizontal statement, for this example, so if you perform service on account to customer, so because you have not received any cash yet, your asset will not change. Your asset will increase by account receivable, not cash, because you haven't received cash yet, but you increase the amount of asset in the account of accounts receivables. And on the other hand, because you provide a service, so your retained earning will go up because your revenue goes up. So this will be an example of recognition. So you recognize the revenue that you provide, like you received, because you provided service to customers. Another term that we need to know about is realization. Realization just simply means collecting money. So, which is basically opposite of recognition. Recognition, you're just recording the event without collecting money, and then realization is collecting money. So one example of realization, we can use the previous example. So previous example, we talked about your company providing service for customers on account. So your customers has not paid you back, but you recognize the event happening. You recognize that revenue that you received. And now let's just say that your customer is paying you back. So your customer is paying the cash to you. And so that will be a realization, because you're actually receiving cash. So in the horizontal statement, so because you receive cash, so your asset will increase by a form of cash, and also your account receivable will decrease because people don't owe you money anymore by the same amount. So this type of transaction would be an asset exchange transaction. So this will be a type of realization. So you're actually collecting money. So you're realizing that cash. So notice that we are not putting anything on revenue, because we recognize the revenue already previously when you first provided the service. So you do not have to put an increase in revenue or increase in retained earning in this case when you realize the collection of money. So those are the two terms that we need to talk about before we jump into the other materials in Chapter 2. So make sure you understand these two terms.